Ladies and gentlemen, welcome back to the channel. This is your final warning for what is to come. This is really the last video that will be posted to this channel before this market is about to go crazy. I've explained this in a couple of prior videos, but we're going to do it one more time. For anyone that is just tuning in, that has not seen what is coming next. The writing is on the wall. The upside is almost here. With almost a certainty. Now, could things evolve differently than expected? Yes. But certain things are, as I would view, like, again, almost a certainty, in which one of them is volatility. Okay? When volatility goes up, Wall Street hedges. They sell stocks. They do very very complicated strategies sometimes. Okay, I was going to say intricate strategies, but maybe complicated strategies is just a better, simpler way to put it. And it's no surprise why maybe parts of your portfolio have been underperforming the last couple of weeks. It's explainable. And we're going to do that, and I'm going to share with you the major catalysts to come in the next really 24 hours, but extending into Friday, that are going to help fuel this end of the year rally. Now, as I've talked about before, historically since 2012, you get about a 4% rally in the last 10 weeks of the year. Well, it's probably going to be even more aggressive this time around just because of the setup that we have, okay? The kind of events we have. But just organically, you typically have about a 4% rally into the end of the year. Individuals like Tom Lee, other fund managers have talked about a 10% rally into the end of the year. I don't know exactly what that's going to look like, what the percentage is actually going to be for the S&P, but I do believe it's going to be a very strong AI-driven rally, and I think that's where a lot of our portfolios are centered around. So we're going to go ahead and get into all of that. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video if you want to come trade, invest, and join the community over there, where we are going out and finding these under-the-radar AI opportunities that I think Wall Street is ignoring. Now, sometimes we do really high-risk, kind of trading stuff, but for the most part, we're buying these stocks because we feel Wall Street is wrong on them. Around AI, robotics, energy, biopharmas from time to time, right? Quantum. And we're investing in them for 12, 24, 36 months. We're giving them time to work. And when they work big time. Okay? So check that out if you guys would like to. It's the best place to be to grow your money, in my opinion. I'm not a financial advisor. I'm not a financial planner. As well as that, let me know your thoughts on what you think is coming over the next 3 months, really into the end of this year. I guess technically closer to about 2 months, but you get the idea. So first and foremost, guys, this one might sound like a broken record, and I know if you've watched the videos recently, you already know about this. If you don't want to hear it again, skip past it. But for anyone that has not heard this before, it is absolutely critical that you hear this. The equal weight VIX, okay, this is why I'm calling it the last warning. I'm not going to talk about this anymore, okay? Now, we might give you a little bit of an update every now and again, but starting tomorrow in after hours, when Meta, Microsoft, and Google report earnings and they tell us AI is alive and well, they are investing aggressively in AI, that nothing has changed, okay? The AI is alive and well and here to stay. Okay, that's what they're going to say, essentially. The VIX EQ, the VIX equal weight, is going to collapse. Okay? Look at the peak back in April. It was at 70. Today, you're at 41.78. Okay? So you're about 50% more than that, 60% of the fear, the total fear level you were at back in April. Okay? What about the headline VIX? Well, Not a lot of fear at all. The headline VIX hit 52 back in April, big spike. Today, it's at 16. Okay, the recent high for the VIX back on October 16th was 25. Just to be at kind of a 1-to-1 parity with the equal weight VIX versus the headline VIX, the VIX would have to be 25, 26, 27 on a percentage basis. There would have to be a lot more fear in the headline S&P. So what's happening here? Wall Street is nervous about big tech earnings. Now, I'm not the first one to say this. I heard this on Wall Street about a week ago. And when you look at the equal weight VIX versus the VIX, it's obvious, right? The VIX has climbed since really September 11th, okay? But it started to take off September 26th, right about the time people were starting to get ready for earnings, okay? Now, what happened today was really your big tech stocks did well. Besides Google, down 1/3 of 1%, Tesla did well, Microsoft did well, Amazon did well, okay? The stocks reporting tomorrow did well. Why is that? Because people believe hyperscalers are going to have good things to say around AI, they're going to have good earnings, but the off chance that they don't, the off chance that they slow down on their AI innovation is a risk. So what is Wall Street doing? They're going out, they're shorting the Russell. They're going out, they're shorting these AI stocks, these risky areas. Why do you think quantum has sold off recently? Why do you think small cap AI stocks have sold off recently? We have a Fed rate cut on Wednesday, okay? We have an ideally perfect market for risk assets to do well. It's this, okay? Imagine it like this. I've used this analogy in a couple other videos recently, so again, we're going to move on from this in just a moment. But if you're Meta, okay, and Meta comes out and they say, hey guys, AI is really not paying off. We think other companies are going to scale back their AI, budgets, so we're going to scale back our AI budgets. Let's say Microsoft cuts, or Meta, whoever it is, cuts their AI budget by 20%. Microsoft, or whatever that company is, Meta, is going to sell off probably 5 to 10%, okay? But it might actually go up. You never know, right? I would imagine it would sell off a bit. What do you think's going to happen to quantum? What do you think's going to happen to small cap AI? It's going to get decimated, okay? Completely obliterated. That's why they might be buying Meta and Microsoft and Google and these big tech names, because, again, the odds are good that AI is alive and well, but maybe if it's not, stock does well or sells off 5 to 10%, great. But they're shorting small caps because, hey, small caps are going to sell off a lot more. It's a lot easier of a way to hedge. Perhaps instead of trying to, short $1 billion in Apple and maybe making money or maybe not, Wall Street can go out and short 100 million in a small cap AI stock. Because sure, if that small cap AI stock does well, goes up 20% after big tech earnings, fine. You lost $20 million. Big deal. Okay? But you're fully long in markets in other places. Versus, if Meta, Amazon, you get the idea, have bad things to say about AI, $100 million short, stocks could fall 50%, you're going to make $50 million. You get the idea, right? There's a higher beta. There's, honestly, if I was a hedge fund, that's what I would be doing. Now, simply put, if you don't believe me, I put into Google here because I wanted something to read off to you. Do hedge funds and institutions hedge when volatility goes up? Short answer is yes. Hedge funds and institutions do hedge when volatility goes up, but they also use a variety of strategies to potentially profit from it, okay? Like what I'm saying here, right? They're hedging in small caps, they're long the Mag 7 in much larger positions, okay? So what happens when the coast is clear, things are fine in AI? They go out, they cover those short positions, okay? They go buy those stocks that they've been shorting and get ready for that upside move, right? That's what happens. Volatility is high. Really, either way it goes tomorrow, following hyperscaler earnings, volatility is going to come down. Volatility coming down is going to fuel this market. I also put into Google, Do hedge funds buy stocks when volatility collapses? Short answer, yes. Many hedge funds buy stocks when volatility collapses as they see it as an opportunity to purchase assets at lower prices. While some hedge funds might have profited from volatility by using short volatility strategies, a collapse in volatility is often seen as a trigger for buying opportunities, particularly for those with long-term investment strategies. Now, this is kind of a hidden secret right now, if you will, because if you look at the VIX, doesn't look like there's a lot of fear, doesn't look like there's a lot of volatility, right? You have to look at a relatively new volatility index, which is the VIX EQ. A lot of people don't even know this exists. A lot of retail investors are going to hear the VIX EQ and say, what? Right? You know about equal weight indexes, but the VIX finally has an equal weight index. And I believe it just launched in the last 6 months or so, if I'm not mistaken. And when you look at this, you can see the severe degree of volatility. Okay? About 50, 60% as fearful as you were back in April. You wouldn't guess that if you looked at the S&P sitting near all-time highs. Okay, so that's number one. Either way it goes, whether, good or bad earnings tomorrow, volatility is going to come down, and that's going to be a positive upside catalyst for AI. Okay. Now, generally speaking, I think there's a 99% chance, in my opinion, that these companies say AI is alive and well. Nothing to worry about. Coast is clear. Okay. Now, what we're also going to have tomorrow is the Fed at 2 p.m. The Fed is expected to stop quantitative tightening. Long story short, that means the Fed's not going to be selling as many bonds or selling bonds at all from their balance sheet. So less selling pressure in the bond market, meaning bond prices might start to rise. Price is inversely correlated to yield. So as the Fed has been selling bonds, bond prices have fallen, yields have went up or have stayed higher. Okay. As the Fed stops selling, there's less selling pressure, bond prices can move upwards, and yields can come down. Or maybe start to come down a little bit more. We're talking 10-year treasury yields here. We're talking yields that affect the real economy, like mortgages, auto loans, credit cards, stuff like that. The Fed really doesn't have an impact on long duration yields at all. Okay, so that's going to be a positive. If it doesn't happen this meeting, it's going to happen next weekend. We're going to hear a lot more about that at the tomorrow. So I do expect that that's going to be a positive event. Okay, JP Morgan expects the Fed to end quantitative tightening. A lot of Wall Street does. I think it's kind of priced in at this point, not fully priced in. So it might be a little bit of a surprise to some on Wall Street. So, keep that in mind. It's not 100% priced in, maybe 50% priced in. So that's going to be a big catalyst tomorrow. Now, up until 2 p.m. tomorrow, it could be a bit mixed, right? I wouldn't even be surprised if you see a sell-off in AI stocks, if you see a sell-off in the markets before the Fed, because of the volatility, because of the uncertainty, the last-minute hedging, if you will, okay? But once you get the Fed to 2:30, Jerome Powell will finish speaking around 3:30. I expect an end-of-the-day rally into Meta, Microsoft, Alphabet earnings, which, again, 99% chance are going to be good surrounding AI. There's probably an 80+% chance that these companies beat in general. I'm sure these stocks do well, right? Who doesn't love Meta, Microsoft, Google? They're pretty predictable. You're not going to have a disaster here either way it goes. Question is, what did they say about AI? And I think they're going to be doubling down on their AI investing, okay? So really tomorrow is the big day. And today is really, right now in this video, is the last time we're going to be able to talk about this until the next video comes out at 4 p.m. tomorrow. So that's why I felt it was important to get this video out, okay? Now, Thursday, you're going to have Amazon, Apple earnings. I think with the Fed and Meta, Microsoft, Google, there's plenty of information to trade off of to kind of extrapolate, right? If Meta, Microsoft, Google have good earnings, markets are going to say, okay, Amazon and Apple are going to have good earnings too. Okay, so really tomorrow could be the big day. Thursday could be quite a bullish day, and then Friday following Amazon and Apple could be a really good day. And I think this fuels, again, with the seasonals and everything we talked about in this video, a rally into the end of the year that's going to favor AI, that's going to favor small caps. via the Fed and the end of QT and really the growth that you're seeing in some of these small cap AI stocks, you just can't get in other places. And when rates start to come down, investors start to seek out longer duration growth opportunities. So that's kind of how I'm looking at things right now. So with that said, ladies and gentlemen, let me know your thoughts on all of this down below in the comment section. Are you bullish? Are you bearish? Are you buying? Are you selling? Are you hedging? What are you doing? And why do you have your opinion? If you're bearish into the end of the year, let me know that, okay? If you're bullish, let me know why that is. If you kind of agree with what I've put out there but have something else to add, I would love to hear your perspective, okay? So, yeah, that is it. Come join the trading community. Link down below in the description of this video if you have not done so already. If you guys want to come invest and trade with us, get involved in some of the AI stocks that we are pursuing. So have a great rest of your day, and I will see you in the next one.